Thank you.
Thank you so much, Hannah. And it's a pleasure to be with all of you today. And to all women all over the world, happy International Women's Day. Today, we're not only celebrating the achievements um, of women's equality and empowerment in just one day. We are celebrating what has been achieved over the years, and we are holding today's webinar for the Global Water Energy for Food program to showcase the best practices and experiencing for empowering women in agriculture through innovative end user financing schemes that is tailored to meet the needs of women. Water Energy for Food is a joint international initiative of the German Ministry of Economic Cooperation and Development, the European Union, the Ministry of Foreign Affairs, to the Government of the Netherlands, the Norwegian Agency for Development and Cooperation, and Sweden through the Swedish International Development Cooperation and the US Agency for International Development. And today we're really privileged to have prominent innovators with us from all over the world. We have Dr. Ahmed Radi, the founder and CEO of EgyMag Biotechnology from Egypt, where EgyMag develops a unique technique to produce black soldier fly larvae as a protein source for animals, birds, and fish, and as organic fertilizers as part of EgyMag's efforts to maintain a circular economy. The black soldier fly larvae are fed vegetable wastes from markets. We also have with us Judith Marera, the founder and CEO of Lanforce Energy from Zimbabwe, where Lanforce seeks to eradicate energy poverty by providing access to portable commercial biodigesters. And last but not least, we have Yogi Joseph, Managing Director of Promethean Power Systems from India, leading a team of passionate professionals who are working towards empowering smallholder dairy farmers to build and own a more sustainable future. And now we're starting with the first presentation by Dr. Ahmed Radi, the founder and CEO of EgyMag Biotechnology from Egypt. The floor is yours, Dr. Ahmed. Dr. Ahmed, can you hear us?
Morning, everybody. Happy International Women's Day. Yeah. We in EgyMag Biotechnology making a renewable protein for next generation by using black soldier fly larvae as a farmed animal. And this is a new concept worldwide. It's not harm, not pets, and can be reared as a chicken in backyard. Next. We in EgyMag, we have two main, the main project of us in EgyMag, and less than 1 year, we testing our micro end-to-end project. Micro end-to-end project, it's called Nature to Nature project. It helps women to increase their income and easy way, fast way. As a farmed animal, they use the larvae as a chicken in backyard for rearing. They collecting the household waste and market waste, especially pre-consumed waste. So we can add in providing income generating for small female holders with I think there is no huge capex in this, and empowering women through generating new opportunities in agriculture sector and achieve the circular economy concept. And by achieving this is achieve is the Sustainable Development Goal 1 and achieving the gender equality and reducing our changing in climate. Next. In Egypt, we have more than 10 million female breadwinners, more than 20% unemployment rate in the female, and 20% from females work in agriculture and waste. So there is strategies to empower smallholder and particularly women to enhance their income and engage them in climate mitigation activities from their home. And this is the big issue in working from home. Easy to work. It's consumed 3 or 4 hours for work. Next. Our activities, it's by introducing rearing the larvae and to making a consumption of household waste and food residue, pre-consumed and post-consumed, and then they enter in the activities of agriculture. It's to enter in food component or enter as a plant nutrition. So increasing the income and achieving the sustainable animal food, low carbon footprint, and less and sustainably. So we can enhance women and youth employment, increasing the sales, and achieving many SDGs goals. Next. Our scope in micro end-to-end to provide points of rearing black soldier fly larvae to raise, and then we making a contract to collect their larvae and frass, and by this contracting, and we can each month we can recycling more than 2 tons of organic waste or organic residue monthly, and reducing carbon emission comparing to composting. It's almost 100 kilogram of CO2 equivalent, and saving the water by making a water retention from the waste almost 500 liters monthly. Next. It's easy to collect the waste, easy to rearing the baby larvae, and it takes less than 2 weeks to fattening the larvae and making a separation and collection the fresh larvae and sending them to the EgyMag or the point of the collecting point. So we can, it's required less than 4 hours a day. It's easy to manage, and it can be working from home, and this is the issue in Egypt. Next. So we can making a vertical protein local production. So we can use the vertical system to rear the larvae and use less land to produce a protein source for animal, comparing to fish and comparing to fish meal and comparing to soybean meal. And also we decrease the protein importing, and this is the big issue, and shortening the supply chain of the production. So we can reduce achieving the climate action, achieving the clean water and sanitation goals, and making an efficient use for the land, achieving the concept of circular economy, and achieving woman empowerment in production cycle and rapid production. So next. EgyMag aims to this year to achieve 20 clusters. Each cluster has 100 units. Each unit it has 5 units. So we can reach 500 subunits, and we will. This month we'll begin increase our subunits in North Upper Egypt, in Bani Suef, and then in MENA, and then in Al-Bahira Cavernators. All of this will empower women and achieving employment for more than 1,000 women, the owners of the project, and 500 and the assistant of them. And also, it's this is the direct impact of employment. The indirect impact of employment, it's in training, supervising, collecting, in supply chain, micro suppliers for the micro suppliers, micro supply chain from the which create from the transporting the larvae from the points of rearing to the points of production and storage. Next. We approach many financial institutes like National Bank of Egypt and another direct NGO. It's the microfinancing in Egypt. It's facing some problem. It's a high interest rates, more than 38 to 40%. And also we can using as looks like a bridge from the bank to the EgyMag and to collecting the larvae, but it's need a sub NGOs and sub units to making some supervising for the collecting, and there is some microloans with a low rates like MFI and context like it's around 20%, but I think there is some changing in rates in these days, but we can directly goes to NGO, and the NGO making looks like a loan and collecting the loans from the females or from the earth. Next. Thank you for listening, and happy International Women's Day.
Thank you so much, Dr. Ahmed, for elaborating the aspects of the end-to-end project and for the women clusters and the experiences and approach to the commercial banks and microfinance institutions. And now moving to our second speaker, I invite you, Judith Marera, the founder and CEO of Lanforce Egypt, Zimbabwe. Judith, the floor is yours.
Actually, Dr. Noura, I think Judith is having some technical issues. Let's move to Promethean Power System by Mr. Joffe.
Hi, good afternoon, everybody, or good morning if that's what it is in your part of the world. So thank you very much for giving me an opportunity to present here. And let me, start with a brief description about Promethean Power Systems. So Promethean started off as a cold chain company. We have a proprietary technology which enables us to chill, produce even in the absence of electricity. So it's a thermal storage battery which enables us to store cold energy whenever electricity is available, and then reuse the cold energy when electricity is not available. So it can work on solar or grid power as required. Now, using this technology, we have developed a host of products, which is across, the milk chillers, cold storages, or even the refrigerated trucks. But over the past few years, we have decided to focus on dairy in India because we see a huge opportunity in impacting farmers in that specific sector. Now, at Promethean, our belief has always been that if you really want to impact the income of the farmer, you need to take the cold chain as close to the farmer as possible. And the reason is that if you take the cold chain close to the farmer, first and foremost, you eliminate the spoilage. There is huge amount of spoilage from the farm till the consumer in India. It's almost to the rate of 25%. So if you bring in cold chain as close to the farmer as possible, you eliminate spoilage. But more importantly, for the farmer, you always bring in market access. Because aggregators and processors are always more comfortable picking up from villages where they are sure that the produce will not get spoiled, during the transit. But we feel that the biggest advantage of having cold chain close and bringing the market as close to the farmer as possible is the fact then that you're able to work with the farmer on a lot of inputs. You can deliver them a lot of inputs which can enable them to actually increase your income. So we have been in the cold chain business for 10 years, and over the last 3 years, we kind of slightly pivoted our model, and we decided that rather than just selling cold chain equipment to dairies or other aggregators, we decided to get involved in the value chain ourselves. And And that brings me to our mission right now, which is building a network of rural chilling hubs, which will empower the smallholder dairy farmers to prosper. So that's our mission, and let me take you through further details, as we go along the presentation. Talar, can you? Yeah. So what we have done is we have made a concept of a rural chilling hub, which involves a chiller. This is for the milk, along with the testing equipment, and we install it in small villages. All the equipment is invested at our cost. But what we also do along with this chilling hubs is not only buy the milk from the farmer, we also give them veterinary support. We also provide them dairy inputs. And most importantly, this enables us to give them financial services in the form of loans to buy more cattle and increase their herd size. And finally, the net result of all this is we are able to increase the market access and the income for them. Now, India has around 150 farming households. Of this 150 farming households, almost 75 million are households which are involved in dairy farming. And what we have seen is that dairy farming, the heavy lifting of the labor for dairy farming is done by the women in the household. Now, whether it is milking the cow, feeding the cow, or even cleaning the cow, most of the work is done by the women. But what happens in the marketplace is that it is the men in the household who actually take the milk to the center, and the payment goes into the men's hands. So we kind of tried to change this model a bit. When we started off this project, we tied up with a local NGO, and we said that we would pay only into the bank accounts of the women of the household, irrespective of who got the milk to the center. So that was quite a big social change which we tried to implement. We ran into a lot of resistance initially, but over the past few years, I mean, now we have set up more than 120 centers, and we pay directly into the accounts of 2,500 women. And over a period of time, we have seen that the resistance has kind of broken down. The men are okay with the milk amount for milk going into their wives' accounts, because they believe that it enables them to increase the savings. Because typically we have seen that the women, when they get the money into account, they typically use it only for household, for children's education, etc. Our impact so far has been, we have seen that through the inputs that we give and the loans that we give for adding cattle, we have been able to increase around 25 to 50% the farmer incomes. Our technology is all about eliminating diesel from the value chain. So we have a savings of carbon. But the biggest impact is obviously the empowerment of women by putting in the money directly into the women's bank account. Yeah, good. So when we got into this business, we kind of, as I said, we faced a lot of challenges initially. We went with the wrong type of technology. We had the wrong approach to the market. But finally, we kind of evolved a model where we said that we have to go with a small volume chiller, because the villages that we go to are extremely small. The farmers are those who have 1 or 2 cows, so they won't be having a lot of milk. So we had to have a proprietary technology which enabled us to scale down the volume of chilling, which is what we developed over a period of time. We also got in a lot of community involvement into this project. As Promethean, us going and trying to do this in the rural communities would obviously be a challenge. So we started working with local NGOs. We started working with rural farmer producer organizations, which are all women-led. And we involved them in the process of identifying the village, identifying the farmers, identifying the entrepreneurs who would run our systems. So we have a lot of community investment behind the entire project. And most important, what we feel is embedded finance. Now, the capacity of our equipment is around 240 liters a day. But what we saw is that typically if I go into a village, it would be difficult for us to get more than 100 to 150 liters of milk a day, because that was what the cattle population in the village was. The moment we started giving loans, or we started enabling loans from our platform to the women, and that's when we saw the big difference and the volume started jumping. So embedded finance is a big part of our entire offering to the women farmers. Now, obviously, there were a lot of challenges initially for getting in the finance to this women. So we evolved a very simple mechanism where we went into prospective lenders, and we told them that we would do the sourcing for you. We would identify the farmers who had to be given loans for buying additional cattle. We would also ensure that the payment for your EMI or monthly installments was deducted from the farmer's milk payment. So if I had to pay the farmer 100 rupees, I would ensure that your 20 rupees or 25 rupees as monthly installment was deducted upfront and paid to you before we go pay to the farmer. Now, that gave a lot of confidence to lenders, because we realized that the biggest cost for the lenders in rural India was cost of sourcing, cost of acquisition, acquiring new customers, and obviously cost of collection. So if we could take care of both of those costs, then they would be happier coming and working with us. What we also did is we developed an app which would enable the farmer to apply for loan on the app itself. She just had to put in some basic details. Basis the details put in, we would share it with the lender. The lender would do a first cut check on or due diligence basis the details that provided. Once it was approved, we would go back to the farmer and ask her to submit the documents. All the money, all the transactions that are done with the farmer are on our app. So she knows exactly how much money she's supposed to get on a daily basis, what will be her EMI deduction, and what she will get after the EMI deduction. The way we structured the loan is such that at no point would be the monthly installment be more than 30 to 40% of the milk that she's collecting. We also standardize the kind of cattle to which we would give the loan for. We didn't want to give it for buffaloes. So we said we will give it only for one breed of cows, which are the HF breed of cows, which would give around 10 liters of milk a day. And the reason we did this is because we didn't want the farmer to take loans and buy the wrong kind of breed of cattle and then get stuck in the payments, the repayments. So this cattle typically give 9 to 10 liters of milk a day, and with 3 to 4 liters of milk, the EMI payments would be but all loan disbursals were directly done to the farmer. So we used to approve it. We used to, in fact, we even vet the cows which are being bought by the farmers. We don't want her to buy the wrong kind of cow. So we have a veterinary surgeon who works on the ground, who checks every cow, and only after the checking is done is the money transferred to the account so that the payment can be made to the eventual seller of the cattle. Yeah, sorry. Yeah, Talar, you can go ahead. So some of the challenges that we kind of experienced, and this probably is the most relevant two slides to this presentation. As I said, access to lenders is a huge challenge, especially in rural India. There is a resistance to giving loans, as I mentioned earlier, because of the cost of acquisition and the cost of collection. And there is a natural resistance to giving loans for cattle. Because cattle is like an asset which can be liquidated anytime by the farmer. She can, anytime they have a crisis at home or some urgent requirement of money, they can easily sell the cattle and get the money and, kind of use it as an expenditure. So since these are collateral-free loans, we used to have a challenge of access to lenders, and we try to mitigate the challenge by offering all that I mentioned in the last slide, telling them that the payment would be deducted upfront, telling them that we would source the farmers for you, so that it was as risk-free as possible for you. The other challenge is, even when the lenders came on board, a lot of them wanted experience of at least minimum 6 months to 18 months of milk pouring. Now, this to us was quite ridiculous because, if we are starting off in a center, in a village, it is my need that the milk volume grows as fast as possible. But if a lender is coming and saying that I will give a cattle loan to your farmer only after she has poured 18 months with you, means I have to wait 18 months before, the first cattle can actually be start moving into the village, which we kind of fought a lot against. I mean, again, we have been able to manage this in some lenders. Some lenders are still hard bound by, the number of months that the farmer has to be pouring with us. So this is a challenge for us. Women farmers is a unique challenge. So as I said, we pay only into the women's account. So the loans also have to go only to the women. One challenge is that obviously a co-borrower is required. So she can't be taking loans on her own. We found that, what used to happen was that the co-borrower would be a husband, and he would take the loan. And many a times she had no clue as to what loan agreement was being signed in her name. So all the meetings were attended by the husband. The husband agreed to all the terms and conditions. And finally, the wife just signed it. So we made a kind of change in our approach. We said that unless the woman is also present in all the meetings and she agrees that she has understood the terms, and so we wanted both the husband and a wife to be a part of all our communication, especially on the loans, so that there is no pushback. I mean, a lot of times the husband signs and eventually if there is a default, it goes in the wife's name or the woman's name, and we didn't want her to go through that challenge. There was also a challenge on age limit, wherein women above, I think it's above 59 years, would not get loans for obvious reasons. So we did something to mitigate that. I'll explain in the next slide. And then is the guarantees, and this is something that all lenders wanted. So they wanted guarantees, corporate guarantees from us. They wanted first loss guarantees from the company, to the extent that they even wanted personal guarantees from either me or even some of the farmer producer organization directors. So this we felt is a kind of a limitation factor, in terms of us expanding this portfolio of finance. Yeah, Tala, can you go ahead?
Mr. Jofi, apologies to interfere. Of course, this is very interesting discussion. You have 2 minutes to wrap up, please.
Sure. That's my last slide. This is my last slide. So, as I said, we came out with the model of loans to existing farmers in New Village, which was quite okay because these are the farmers who already had milk. And we went and signed up with the lending agency saying that we would deduct the milk, deduct their EMI from the milk payment and pass it on to them. We also arrived with an agreement for new to business farmers. Now, this is a segment that normally nobody wants to lend, but we kind of worked out an agreement wherein we paid higher FLDGs to kind of mitigate the risk for the lender. And we have almost half our portfolio of loans that we've given today are for new to business farmers. So these are farmers who are first time coming into the dairy business. We also got into an arrangement for the women Talar, you'll have to go back one slide. We also got into an agreement with the women who are not eligible for loans, so that they would take a joint loan with the FPO. So the FPO would take a shared risk, which ensured that women even above the age of 59 or 60 would get the loans. We also came out with a program where the loans were given to the FPOs. So there is a certain mitigation of risk for the finance companies. The FPOs would take the loan and then they would disburse the loan basis their confidence on the farmers. And the last model, which we evolved just recently, is loans with the FPOs as a partner, wherein the FPOs take the responsibility both for sourcing as well as repayment. And Promethean kind of plays the role as a technology partner. Yes, that's it from my end. And thank you very much. Once again, thank you very much for calling me here, and happy International Women's Day to everybody. Bye-bye.
Thank you so much, Mr. Jofi. It's really interesting presentation. And now moving to Judith Marera, the founder and CEO of Lanforce Energy, Zimbabwe. Judith, can you hear me?
Sure, yes. Hi, Nora. Can you hear me as well?
Yeah, we can.
All right. Thank you so much for having me this morning. My name is Judith Marera. I'm the founder and CEO of Lanforce Energy, which is a woman-led for-profit social enterprise, and our major thrust or our major operations are around the construction and installation of biogas digesters to marginalized communities in Zimbabwe as well as off-grid communities. When we are talking of women financing, as Lanforce Energy, we are so much committed to empowering rural women by providing them with the resources and support they need to thrive. And one of the key challenges these women face is accessing finance to invest in clean energy solutions and improve their livelihoods. Can we move to the next slide, please? Next slide, please.
If you can continue with the explanation verbally, probably Talar was disconnected. If she joins again. Judith, can you hear me? Judith, can you hear me? Hello?
Let's wait for a minute, Nora. Maybe Judith's internet connection has a small bug. Please be patient.
I'll also check on her.
Great. Thank you.
So till Judith can join us, actually, I have a question to Mr. Jofi. Mr. Jofi, can you hear me?
Yes, I can. Please go ahead.
Yeah, sure. So I have a question regarding the app that you have explained for women, and that they apply for the loan, and they can follow up all the procedures. So understanding that there is high literacy rates in India, so how you ensure reaching out to vulnerable women, rural women through this app? Whether you provide some training to women or allow like the children to use this app? Thinking over to you.
Yeah, so yeah, that's a nice question. So I think what you said last is right. I mean, most of the times it is the children who pick up first. So most of those women may not even be having a smartphone, but there would be one smartphone in the family, which would either be with the husband or with one of the children. So normally we have seen that the children, are the ones who are most, efficient or proficient with the app itself. Now, we think that when you develop any app, I think the most important is the information in the app has to be useful for the farmer. And if that is the case, then they will use it. So which is why we try to make anything on the app, whether it is the passbook with all their payments, whether they're ordering for any feed, we made it extremely simple and extremely easy for them to do, and their life became easier. So before, if they had to have access a loan, for example, they had to call up one of the team members, then they had to give their details, then they had to kind of give their PAN number or any other details on the phone. We had to collate it, then we had to send it to the finance company. We kind of made all that seamless, and that's why we feel the take up has been quite good. But when we launched this, we also did very, very targeted training programs. So, and there was a lot of incentives even for the village entrepreneurs. So we actually trained groups of entrepreneurs, and we told them that you have to achieve 90% of the app coverage within the next 30 days, and for which we give them some gifts. So initially you have to give some incentive also, so that the information about the app goes across to all the women in the village.
Thank you so much. And also I invite all participants to, if you have questions, to write it down in the chat. And Dr. Ahmed, if you can hear me, I have a question regarding the business model that you have introduced.
Yes.
Yeah, it is regarding, if you can give us more elaboration about the business model and how you envisage financing rural women through NGOs or through banks, like how you envisage financing the boxes, the Black Lava boxes, and quick elaboration about where these boxes are placed and how this provide rural women in Egypt and in all countries with like a closed system to get over the marketing challenge. Thank you. Over to Dr.
Okay. We use the advantage of rearing the larvae in vertical way, and in small area, it looks like in more less than 2 meters, 2 square meter. We can produce 200 kilogram of product every 2 weeks, less than 2 weeks. So we can use something looks like a room, closed room in backyard. Every rural homes, it has some rooms for storage, or for storage the feed for animal, or for rearing the chickens and ducks and something like that. We can use this room to put our mag box or containers which contain the larvae in very small area. And then how can we select this woman? We going to the NGOs and that working in this countryside or in rural area, and choosing the age criteria from 18 to 35 years old, and then send one of trainee of from the company to making some initial training how to use the larvae, how to collect, how to process and the storage the waste, and then how to feed the larvae. We can, in each unit, we can start less than 2 weeks or this almost 10 days to start the rearing with the lady and the woman, and then after 2 weeks the revenue will come to the women.
Thank you so much, Dr. Ahmed, for the
I think Judith
elaboration.
is back.
And now we have Judith back with us. Judith, can you hear me? Apparently, Judith is experiencing an technical difficulty, so we can move to one of the questions of the audience, Lako Stefan, to Mr. Jofi. He's asking that the lastly presented model seems to be fit for the purpose in the context of rural small dairy products in India. So apparently he's seeking more elaboration about this model. If you can provide more insights about it.
Yeah, sure. So we have kind of evolved this model for dairy because, as I said, a few years back, we took a decision to concentrate on dairy because that is what we believed the maximum impact would be. So there are three things which are essential. I think the first and foremost is the fact that you have to be able to eliminate the spoilage for the farmers, especially in remote rural areas, which is why you need a chiller. And you can't have any ordinary chiller. You need chiller of small capacity because others it's not viable. I mean, even in a country like India, which is the largest producer of milk in the world, the average surplus milk per village is less than 200 liters a day. So you need to have a technology which enables us to chill very small quantities. Now, in addition to that, I think one of the biggest contributions that we make to these women is that we give them a ready-made market. So we guarantee the women farmers that whatever milk you give us, we will chill it and we will sell it to somebody. So that's a guarantee we give. And we have been able to give that guarantee because we have been in this business for the last 10 years. So we have signed up with the larger dairies who have contracted and agreed to buy from us. So we are not in a position where we have to tell the lady that, okay, you have got milk now and we can't take it because there is no buyer. So the buyer is already there. And which brings me to the third thing is that with 1 or 2 cows, dairy becoming a sustainable business for a farmer in India is very difficult. She needs it to become at least 4 to 5 cows so that it becomes a primary source of income. To grow from 1 or 2 cows to 4 to 5 cows, they need finance. And that finance is what we have been kind of working with multiple partners to offer. Now, once we offer the finance and we guarantee purchase of the milk, that is when the farmers are confident that, okay, I can buy another cow, I can sell the milk, and I have enough, money to repay the loan. The loan gets repaid in approximately 18 to 24 months. And then, they have the full benefit of the value of the milk from the cow for the rest of the life cycle. Yeah, thanks. I hope I answered your question.
Yeah, thank you so much, Mr. Jopi. Very clear elaboration and very interesting business model, which also helps to increase the agency of women and enabling, like, as part of the requirement that you give the chance to women to understand the terms of the collateral and the terms of the loan before signing the loan, which is very important in enhancing women agency. And also for EgyMag business model, which is also a very good business model that helps in getting over social norms in MENA countries, specifically in terms of like women mobility, because it enables women to work at home. Very interesting discussion, and we will also now moving to our 3 panelists from financial institutions all over the world. We have the pleasure to have with us Ms. Alia Nazar Farahat, the National Financial Services Manager for ALMajmoua. And we also have Ms. Lorraine Sonlanda, the Managing Director for Zambuku Trust Microfinance, Zimbabwe, and Ms. Nalini Shinta, the Head of Co-Lending and Strategic Initiative, Avanti Finance, India. And I give the floor to Miss Alia now, ALMajmoua group, to explain more about the end-user financing schemes and how these end-user financing schemes are tailored to meet the needs of women. The floor is yours, Miss Alia.
Thank you very much, Noura, and welcome everybody. So as we've seen till now, women are clearly, they are key in the economy, but we all know that they are still facing many barriers, so such as limited financial literacy, the lack of formal identification documents sometimes, societal norm, cultural constraints, and also lately we've seen this unequal also access to technology. And since our creation at ALMajmoua in 1997, we always have had a strong gender lens in delivering our financial and non-financial services. So we're always keen on making the loan accessible for our women clients. We're being sensitive of some key operational principles, such as, female serving, the holistic approach in providing financial and non-financial services, so that our relationship is really way more than just a loan transaction. For our group lendings, there is a strong financial literacy component. For our individual lending, we've been providing for many years small loans without any guarantee for our female clients, and plus with some tailored non-financial services. So to just focus on something that I think is important in terms of financing mechanisms. So in Lebanon, we've seen an increase of female entering the agriculture sector, social and solidarity economy, or even circular economy. And at ALMajmoua, we've been developing last year an agri-finance loan product, which is a subsidized interest loans for farmers. And we've been trying to really focus on reaching out to women-led farmers to benefit from this new product. And we also made some adjustments for them in terms of collateral, but also flexibility in repayment, flexibility in follow-up visits even, because we are keen when we have women clients not to disrupt, the family routine. So we always make sure that our female clients are comfortable at all time in this relationship with the MFI. I won't take much more time because, of course, I want to give the floor to my other colleagues. But just to mention that we have been supporting in the past 2 years female-led social enterprises, and we're seeing this a very interesting trend where we have many women and young women who are going into the field of social enterprises. And I will mention one, for example, that is Garbalizer. And I will put it on the chat, but it's a woman-led social enterprises producing organic fertilizer, and they are really an amazing case study to look at. So we're currently working on developing an innovative social enterprises financing product. And with the support of We4F, we've been able also last year to develop a loan product that is tuned on supporting the farmers to invest in renewable solution energies, such as solar irrigation, solar pumping systems, to reduce the cost of energy. And we are now looking at securing some financing for this project so that we can go beyond the pilot. And once we will have the funding, we will also make sure to specifically target women-led farms, basically. Last point, we're also working on a specific loan product for cooperatives, because in Lebanon, most of the cooperatives working on food transformation are women-led cooperatives with women members. So this is also a lens that we're looking at closely for supporting access to finance of females in general and in agriculture in particular. Thank you.
Thank you so much, Ms. Alia, for the clear elaboration and the interesting financial schemes, specifically the loans for cooperatives, which is very much needed in the context of rural women development and empowering them. And now moving to Ms. Lorraine Thlanda, the floor is yours.
Good day, everyone, and happy International Women's Day. Thank you for having me. I am representing Zambuku Trust. We're a developmental microfinance institution that has been working with marginalized communities for the past 3 decades. So I'll just highlight maybe 3 points that have come up in the presentation in terms of access for financing for women. In Zimbabwe, we've made significant progress in terms of having institutions that are pro-women, especially microfinance institutions. We have about 200 microfinance institutions, and over and above that, we have one bank, Women's Bank, is government-owned, dedicated to meeting the needs of women. So some strides have been made, but the biggest challenge, as has been mentioned earlier, is collateral. So we continue to improve on what collateral substitutes we can use so that we make funding more easily available to women. Group loan lending schemes, we run that model quite extensively. But over and above that, our women folk in Zimbabwe save quite a lot. And most of those savings are at home, and usually kept in safes at home. So as an institution, we have targeted to work with those women to use those savings as deposits for asset purchases, be they assets for homes or assets to support their business projects. And over and above that, we are quite active in using invoice discounting and order financing products so that we shift the risks to larger corporates that may be supporting women. One of the biggest challenges, obviously, is costs, the cost of funding to the women. Generally, as a country, we are 80% dollarized, and but there's an issue of US dollar liquidity within the formal financial sector. And as a result, the lines of credit that are available are limited, and those that are available are at a cost of about 2% per month, which is 24% per annum. And you'll find most of the microfinance institutions are lending money at between 5 and 15% per month, which is over 60% per annum. So that really creates problems for access for women, because it means their working capital costs are huge. And as an institution, what we've done is sought partnerships with the funders that are pro-women. And currently we are running a project for renewable energy funding for women in rural communities, where we have to date sponsored about 6,000 household lighting systems, as well as solar powered irrigation systems. Over and above that, we have partnered with funders where we are working with the well-established farmers with export contracts, where they can use the women to feed into their export, and at the same time facilitating them in the long term to have their own export contracts. We continuously do financial literacy training. That is part of our core mandate as an institution. But over and above that, we've realized that there are softer issues that we need to tackle, such as risk attitudes, because our women clients tend to borrow small loans, and even though they have a good record, we keep encouraging them to get bigger loans, and that needs also training, continuous training in managing business risk, so that they can grow as enterprises beyond just survivalist business to become enterprises that can be formally registered. We also face cultural issues in terms of especially married women. They need to continuously get the permission of husbands to borrow. And sometimes we found that involving the husband from the onset in terms of convincing them of the need of the loan and the profits that are going to be generated and the benefits that will come to the families has helped us. And we make the husbands co-guarantees within the facilities that we lay out. And another issue is confidence issues. Sometimes women find it difficult to approach financial institutions. We've employed female officers, and we also try to employ as much as possible officers that are drawn from communities in which women are found, so that they operate within their comfort zones. And in terms of outreach, we very much aggressive in terms of trying to find women where they are, so that they are more and more aware of what is available, what financial options are available for them. We go to churches, we go to social meetings where they do their voluntary saving schemes. We are there so that we create partnerships as much as possible with our women folk. I think I will stop there. Thank you very much.
Thank you so much, Lorraine, for the very comprehensive elaboration about existing women end users financing schemes. And now moving to Ms. Nalini Shinta, Avanti Finance India, the head of the co-lending Avanti Finance. Can you please share your experience about the available women end users financing schemes?
Yes, thank you, Naren. Good day, everyone. From Avanti's side, we learn more from a business partnership model where we partner with most NBFCs and MFI and community-led partners based out of rural areas. So what we like today, today we disburse loan to, in our portfolio, we have more than 90% of women borrowers. And they are there are close to 40% who are MFI and 60% are graduated MFI. One of the major reasons why, there are three reasons why we go for giving loans to women borrowers more, is because the social obligation in terms of when we give a loan to a woman is higher, and that's why that's one of the major reasons why loan is given to women. And in most of our partnership is we try to maintain we try to give more and more loans to women. Few more things is empowering the women by ensuring they have their own account open. Money goes to their account and not to their husband's account, and that is one of the major reasons why we wanted to give loans to women. Also, one more reasoning for giving loan to a woman has always been that it is not just the women to whom we are giving the loan, but she'll ensure it is used for the purpose it is taking loan, and also it uplifts their household as well as their standard of living. We have partners like Gramuthan, where we have 99% of women borrowers today, where we give loan for small business loan, or for agriculture, and also for livestock like buffalo and cow. Most of the women today in Avanti, when we they are not only just taking care of the household, but also taking care of they're having a shop or a cow or a buffalo to from which they are getting additional income for the household. The comfort with giving loan to a woman is also that it's not just a social obligation, and plus they are more aware in terms of the joint liability group and the SAG group meetings which is there. So we try to approach women from that angle. Most of the women, the average ticket size which we give loan is 45,000. Yes, there are challenges in giving loan to a woman above 1 lakh rupees, and there are challenges because most of the inflow which the money which comes in from women are it is more in terms of cash, so there is no accountability and we cannot check the bank statement for giving them a higher ticket size loan. But when it comes to a smaller ticket size loan, there is a lot of comfort giving them a loan, and women are more disciplined compared to the other gender, and they have and when we give loan to a women, and that's what we want as an organization, is that when we give loan to a women, they have a higher share in decision making when it comes to their household. And some of our partners, like we have Stellabs, where we have close to 60% of women, 60-70% women, where we give them loan for buying cattle, and they already have an existing cattle. So the milk pouring is shared with us, and that's when we analyze and then we give them loans so that there is also repayment capability. We don't over leverage them. And what we see as an organization and more from credit bureau perspective is that there is lower default rate when it comes to women, and NBFCs are more comfortable giving loans to them as it is their credit scores are better, they have a lower default rates, and they are more disciplined in terms of making repayment and also keeping their credit history clean. So these are the few initiatives which we have taken for women borrowers. And definitely there are challenges which we face when it comes to a ticket size which is higher than 1 lakh. But most of these women borrowers, what I said was like they were MFI borrowers and now they have graduated to a non-MFI borrower. So their household income has improved and it is more than 3 lakh rupees. And now it's like we have 60% of our women who has graduated to household income which is above 3 lakh rupees. So this is what we do as an organization, give them loan in terms of livelihood, livestock, or a small business loan so that they can improve their income, standard of living, and also have a share in the household in terms of a decision making.
Thank you so much, Nalini, for the elaboration. And now we're moving back to Ms. Judith Marera, the founder and CEO of Lanforce Energy from Zimbabwe, because she was experiencing technical issue for her presentation. The floor is yours.
Thank you, Nora. And probably I should just take over from where I left the presentation, where I was looking at the challenges that are faced by rural women in Zimbabwe to access end-user financing. So accessing end-user financing is one of the biggest challenges that women experience in Zimbabwe, and as they are not aware or they do not have the actual information of the various financial schemes that are available, and they make it difficult for them to also meet the collateral requirements that are set by traditional lenders. And additionally, high interest rates, which make it difficult for them to afford loan repayments, and the issue that bankers perceive them as high risk due to factors such as limited financial history or income stability. So what happens is when a woman approaches some financiers, especially the banks, they don't have that collateral, and they don't have any history of maybe having a bank account elsewhere. So that limits their opportunity, or that limits their ability to access financing so that they can upscale or they can improve their day-to-day projects. We ourselves, we provide them with access to renewable energy, and to lessen the burden for the women in rural areas, what we've done is we've come up with a credit scheme whereby we provide our services on credit. We allow them to pay a small initial deposit and then monthly installments for a period of up to 12 months. So we are doing so that we try and lessen the burden on the rural women in terms of affording our services, as well as allowing them to have access to clean cooking. We also conduct what we call community engagement programs, where we raise awareness on various financing schemes and how best they can also afford our services, so that at least more women are empowered. We are also looking at partnering with microfinance institutions in Zimbabwe, so that at least they'll be able to work on the financing for these rural women and then pay at affordable rates. So this is something that we are already working on, negotiating with various microfinance institutes to enable these women in rural part of Zimbabwe to have access to our products and services. What we intend to do is we provide our products and services on credit is trying to support the women in accessing end user financing, as well as making a positive impact on their lives and the communities that are surrounding us. This support will lead to increased access to clean cooking solutions in form of our biogas solutions, which are the ones that we provide, and as well as improving the quality of life for women and their families, and allow them to also have knowledge on different avenues that they can penetrate to access financing, which will allow them to also participate more in other income generating activities, leading to improved livelihoods and economic empowerment. So by promoting our clean energy solutions, Lanforce Energy support contributes to environmental benefits by reducing reliance on fossil fuels and promoting sustainable development. So with access to financing, women will be able to invest in our solutions. And as Lanforce Energy, we're also committed in supporting these rural women in accessing the end user financing through our pay-go model, which is a very powerful tool for overcoming the challenges of end user finance. And we believe that by empowering the rural women, we create a more sustainable and equitable. How do we do this? We work with women in various groups because we also work with cooperatives whereby they can collectively organize their monies and support 2 or 3 women, probably per each session, to say we are having 3 of our women having the biogas solution installed at their households, and they work together as cooperatives. They draw their monies together and they support each other until every member of the group has access to our solutions. And for some of them who will be related in somehow, we can have a combined biogas digester installed at their households. So the pay-go model is, I'm seeing it well for us for now, although we would want to have more women having access to financing, hence our mitigation to partner with microfinance institutions in the country, like Zambuku Lorraine's microfinance institutions, to say we can work together, and if we work together, we would have contributed to a more sustainable and equitable future for the women. And the most thing that I like is there are also women leading some of these microfinance institutions, and they understand the pain and the challenges that women go through when it comes to accessing financial support. So I believe with the intervention, we'll be able to impact more women in the country. I can leave this time for any questions. I'm sorry because of time I had to drop out. So I think if I can leave it here, we can welcome questions. Thank you so much.
Thank you so much, Judith, for the very comprehensive elaboration. And we'll get back to the question. Actually, we have heard really interesting business models from the 3 companies, EgyMag, Lanforce, and Promethean, and where these models has worked towards getting over the social and cultural norms and challenges facing women, facing rural women all around the globe, mainly in relation to the collateral and restricted access to land and resources, and limited access to information, and collaterals where usually they're not allowed to, or they face challenges in providing collaterals, and high interest rates and the requirement for call guarantees from spouses or from innovators. We have heard very interesting business models, and where these business models has worked towards tackling these challenges in terms of the collaterals, in terms of the approvals of the spouses, in terms of availing information through mobile apps, in terms of even availing, getting over access to technology through providing tailored training and enabling the elderly children to use these apps. And now I would like to open the floor for questions from the innovators that are present with us. And I would like to give the floor to Dr. Ahmed to pose any questions to the financial institutions representatives with us. The floor is yours, Dr.
Thank you, Dr. Noura, and thank you all the marvelous presentation. My question for Alia about how tailoring their end financing from ALMajmoua to tailor for the Egyptian women.
Okay, thank you, Dr. Ahmad. So I think that regardless the country, we will have to go through the same methodology to adapt and make our products having a gender lens. And in the chat, there was a very interesting question that is, I think, also related to your own question, where I've been adding some of the key steps to do in order to have this gender lens. Now, I'm not sure if you would like, Noura, me also to come back to the audience and sharing a bit of learnings from our journey and recommendations for the way forward. So I could do this now or maybe later on, depending on you.
Yeah, please, Alia. Yeah, it would be great if you can share the learnings now with the audience. And also, yeah, if you can take this opportunity also to answer the question posed in the chat.
Sure. So in the chat, I believe I answered the question. Just yes, in regard to this question related to the interest rate. So I think that this here, the context would be very different from a country to another. We heard from Mozambique, for Lebanon, for ALMajmoua, we're looking at interest rates of 2% per month. So we're talking 24% for the whole year. And still for farmers, for women in agriculture, it is sometimes a bit high. So we're trying to identify some friendly donors sometimes to support us and help us provide some subsidized interest loans. So what we call the blended finance approach. Now, in terms of learning and recommendation, and I will try to make it as fast as possible. First of all, it's important to believe in adopting a holistic approach. So when we're serving women, it's not about only the financial challenges, it's also about the social and the business challenges that they're facing. So one of the things that we've been very strong and the value proposal for women has been very much appreciated is that ALMajmoua is able to provide both financial and non-financial services specifically for women. Second, and related to non-financial services, clearly we need to strengthen the capacity of our women in general and women farmers in particular. So to provide them with specific trainings, how to improve your agriculture business, how to implement sustainable and regenerative agriculture practices, also training on climate change that is going to be extremely relevant for countries all over the world, but specifically also in the MENA and Africa areas. Then we talked about how to reduce the collateral requirements. And here there is, besides what we've heard from the different financial institution here, there is also some ability to look at more innovative things like capital leasing services, micro equity investment mechanisms. All of this can help, eliminate or reduce the collateral requirements for women-owned micro and small enterprise. But we also need to look into other financial services. So we have to, the microfinance institutions, institution to be innovative, but because it's not only about the financing, sometimes it's also about the insurance. So we need to diversify ourselves and also provide tailored insurance products for our female clients. Last point, couple of last point, to look into digitalization and digital finance. So clearly, we need to ease the loan process by doing digital onboarding and digital repayment through e-wallets. In some countries, especially in Africa, they're way more advanced than other countries, like for example, in Lebanon. And in looking at this digitalization aspect, we need to make sure that the policy makers ensure gender inclusive design for the infrastructure, for encouraging a collaboration amongst financial service providers, the question of interoperability. I will not go into the technical details, but definitely there is some gender lens to bring into the digital finance. And last, to always think about how can we be innovative with our financing, so and with the gender lens focus, and fostering peer-to-peer exchange, MFIs coming together to share their experience from different countries, I think is extremely important. And then it also allows us maybe to advocate for having more gender lens funds dedicated to financing women businesses, and therefore to make progress on women financial inclusion. That's it. Thank you.
Yeah. Thank you so much, Alia, for the excellent explanation. And now moving to Judith, we have a question from one of the audience regarding the interest rates. It is that it ranges between 16 to 20%, and they're asking if it is possible to lower this interest rate. And then after answering this question, I would also invite you to pose any questions to representatives from financial institutions that would tackling like existing women end users financing schemes. Thank you.
Thank you, Nora. Yes, I think it is possible to reduce these interest rates.
Judith, can you hear me?
This meeting is being recorded.
I
Perhaps
guess
I would come in while Judith is trying to reconnect, since it's relating to interest rates. I think the biggest challenge is the cost of funding to the financial institutions themselves, because we are borrowing at cost of about 2% or higher. The way we've gone around this is to look for donors or partners that are willing to make available grants or concessionary funding, which then allows us to go below the 2%, and it makes more business sense for our women, and we can help more women. Thank you.
Thank you so much, Lorraine. And can you please elaborate if you have any specific financing schemes to women cooperatives in Zimbabwe?
We don't have specific financing schemes, but the way we work with them is when they want to purchase assets, for instance, for their businesses, they can use their savings from the cooperative schemes to put deposits for individual members. So that's how we've been working with them.
Yeah, great. Thank you, Lorraine. And also, do you have, like Judith explained, like a pay-go, pay-G model? So is it linked to your financial institution, and like you have access to this software and use it to add to top and highlight the existing financial and non-financial services?
We are using the PAYGO model for rolling out our renewable energy project to women in rural areas. So it's specifically in support of our solar home systems. So for our normal lending, we just go to our clients for collections, or they use digital platforms to make loan repayments.
Yeah, thank you so much. And now I'll invite Mr. Jofi to pose any questions to financial institutions regarding how to tailor more the end user financing schemes to take into consideration the needs of Indian women.
Yeah, so yeah, I had a question, but before that, I had an observation also. And what we find, at least in the case of India and dairy farmers, is that the rate of interest is not so much of a constraint. Typically, the rate of interest that we get varies from 22% to 28%. And we are able to structure the loan such that the monthly installment doesn't come to more than 30 to 40% of what the farmer earns through her, milk supplies. As long as we are able to ensure that she gets a good cattle and she is able to take good care of the cattle, by supporting her with inputs, etc. So, to my mind, the rate of interest is not the issue. But I think the larger issue we face is access to finance. And this is some of the challenges I mentioned, is that access to farmers who are not pouring with us currently, access to farmers who are new to business. And so this was a question I wanted to, kind of pose to Nalini. She works very closely. I mean, we have been in discussions with Avanti for quite some time, and I know that they do a lot of dairy work. So Nalini, my point was, how do we structure something for a new to business farmer? When we tried to crack this segment, the only way we could do this was by putting a high amount of FLDG from our end, which was not sustainable. So we did a few loans wherein we paid almost 40-50% FLDG, but we found it was not sustainable for us to keep putting so much money, block so much capital. But how do we work with this new to business farmers, wherein you don't need to look at a history of 6 months pouring or 12 months pouring? We believe that if you really have to change the economic structure of a village, it's not enough that only the current farmers are benefited. Even new farmers should be benefited. But for them to come into the business, they need loans, and they need to buy cattle. We are willing to commit to purchasing all the milk, but there has to be a way we can get loans across to them. And it cannot be through foundations or grants, because those are not sustainable. There has to be a financial structure which makes it possible for us to give loans to new to business women farmers. So I just wanted to understand Nalini's experience and thoughts on this, on how we could take this forward.
Hi, Jyoti. Thank you for the question. So, when in the livestock segment where we want to give loan to a new to credit farmer, today in the all other business we do have we have 30% new to credit in our platform.
Nalini, I just want to clarify, it's not new to credit, it's new to business.
New to your business, but they have a credit history, or
No,
they don't have a credit
history? New to dairy business.
New to dairy business. Okay. So what we do in terms of, if someone is new to dairy business, and if there is no milk pour, definitely we have model where there is a milk pour which is there. But in terms of a borrower, we try to have, if they have a SHG or a JLG group which is there, or we take a guarantor for the person, and we give them, there is always a capping of 30 to 45,000 of is what is the amount we can give them. Obviously, interest rate is what you said, it varies between 22 to 28%. And we it is more, so what we do in our model is that also the partner who is partnering, for example, Promethean. So in terms of social underwriting, and we also try to underwrite them on the basis of what is their household income capacity, at least. What is the capacity? Will they be able to service that 30,000 or a 45,000 rupee loan which we'll be giving? So what we do is we analyze them on the household, not the income which they have declared, but more on what types of assets do they have. Like, do they have sewage, washroom? Do they have a TV, or do they have a kacha or a pakka house? And then in terms of like how do they have a smartphone? How many smartphones do they have? Do they have cattle, any cattle? So, for example, he's coming for a cow, but if they have any cattle in the house, any livestock, do they have a truck or any kind of asset which is there? We analyze them on the basis of that. The entire household we analyze. Also, if the person has an income which is also we analyze the household members credit bureau if there is any credit bureau, and then on that basis we take a decisioning that if we can give them a loan or not. And new to business, they may be a new to credit, or they may have a house, they may have a credit score, but we then on the basis of the income which we are calculating using the assets which they have provided, and if they have any obligation, on that basis we put a capping and then we give a loan. They may or may not be like, because with some partners definitely it's the milk pouring, but with some partner, if I'm giving a livestock, it is on the basis of what is the income and what is the liability of the person, and will he be able to service the loan, will he or she be able to service the loan. Mostly it's and also there is a comfort from partner which is there. But more than that, it's the data which talks. So we that's the way we look at it in terms of when it comes to a livestock for a women borrower or for a male borrower.
Okay. Okay, thanks. So we can connect offline and we can discuss this perhaps furthermore. Yeah.
Definitely.
Yeah. Thank you so much. And Alia, please, the floor is yours.
Thank you. And very quickly, because the question of Jofi make me think about maybe to share with you something we've seen in the past 6 months. So related to this renewable energy investments, we've been approached by some private companies, and we're talking about solar panel installers or solar solutions private company who reach out to ALMajmoua and telling us, would it be possible for ALMajmoua to finance the private sector, entity, the business, and then the business would actually be installing those solar pumping, solar irrigation at the farms, and the money would be repaid from the farmers to ALMajmoua, but considering that the collateral would be the equipment that is being installed and that would be managed by the private entity. So what I want to say is that in terms of innovative mechanisms, we're seeing some new things that usually a microfinance institution would not necessarily naturally go to, but I think that in terms of scaling up and serving more with the adapted solutions, it's interesting to see this development of private and microfinance institutions relation over.
Yeah, thank you so much. And this is very interesting because I do agree with you that these innovations is needed to meet the needs of the new technology and the requests from the market, whether youth or women or any other groups. And I would like to take this opportunity to ask Dr. Ahmed, because I understand that EgyMag also business model is unique in its features, because the main capital cost is in the boxes that where women or youth can breed the black soldier fly. So how you envisage, because I understand that there were many attempts to approach financial institutions to convince them to have a tailored end user financing schemes for women. However, given the fact that in Egypt, now the situation is much worse because the interest rate is more than 38% because of the increase in the interest rate and the corridor rate. So for the microfinance now, it is more 40 plus. So given these challenges, how you envisage that financial institutions can envisage, or what would you like to see in financial institutions to meet the needs of women in this financing? Thank you, and over to you, Dr.
Thank you. It's a difficult question. Already 2 weeks ago, we changing some approach in business modeling of micro end to end, and reach NGOs for making some co-financing of grants and the microfinance, so we can reach to the it's minimum less than 20% for the interest rate for them. And also we try another business modeling for put directly from the company to the female holders.
Thank you so much, Dr. Ahmed. So the company would be the one who would finance the boxes.
Yes, but it's very it's a little difficult to expansion make all the project all the time, but it's taking we can divide it about every month we can put 10 units by 10 units by 10 units, and also we after the inflation the prices of feedstocks and fertilizers become very high. So the using for the larva directly to the alternative to the feed, it will be very affordable for the farmers. I think any problems it has an advantage and disadvantage. I think it's a little advantage, a bit advantage for us.
Yeah. Thank you so much, Dr. Ahmed. And now moving to Jofi and Lanini in India. Actually, I have a question to Jofi regarding what would you like to see for the services and like the products that would be availed to facilitate the entrance of new women breeders in the dairy product supply chain. Given, for example, that if we take the existing practice of, for example, what Nalini has explained, some women would not have assets. Like it is not necessarily that women would have a cattle, a smartphone, or maybe a number of smartphones, resources, but she is willing to establish a project in dairy products, specifically that this is something that most of rural women all over the world works in because this is their comfort zone. They have seen it maybe in their parents' house. So from your perspective, what would be your recommendation to facilitate like the entrance of these women to finance?
So yeah, see, what I believe the beauty of the dairy business is that the cattle can be productive from day one. So typically you're financing an asset which is productive from day one. And as I said, if you're able to structure the loan such that only 30 to 40% of your income from milk has to go back to paying your monthly installment, then that works well. But rightly so, there is a lot of hesitation from the finance companies in financing new to business farmers or new to credit farmers. And historically, there has been, I mean, I can't blame them for not doing it. I mean, there have been enough defaults, enough, challenges they have faced, and it's a high cost. Cost of acquisition and cost of collection is kind of prohibitive. So I would say 2-3 things. First of all is partner. I mean, you have to partner with companies which are already working there. The expectation is not that a finance company has team in every village in India, but for example, we are present in 125 villages in a small district in India. So we have that, can work as the extension. As Nalini rightly said, there is a lot of social capital, and I think the social due diligence is far more important than the financial due diligence. And that is again something that we have been trying to implement through our through our FPO partners, the farmer producer organizations. What we have been telling them is that you have to first suggest the farmer who will get a loan, and the history, you have been in the village. So you do the social due diligence first before even we get into the financial due diligence. So, but the other most important point is it is not enough that you just give the lady a loan for a cow. We have seen enough women failing. So for example, a typical HF cow can give around 10 to 12 liters of milk a day. But we have seen women struggling with 3 to 4 liters a day, which is not enough to make up their payments. And the reason we see is that they have not been trained. They have not chosen the right kind of cattle. So that is another role that we believe we have to play. both helping them in selecting the right cat of cattle so that they are not forced to, dip into their household savings in order to pay the loan back, and also giving them the correct kind of inputs in form of training, etc. So I would think it's a combination of three things. I think the finance companies have to leverage on companies who are already working in the value chain. The second is you have to ensure that it's not just the loan, but you also have inputs to the lady farmer along with the loan to help her get the right kind of income. And third is the social capital. I think the social due diligence is super important in all these kind of loans.
Thank you so much, Jofi. And whether do you think also that I believe that also financial institutions has the non-financial services that is also provided to women and youth and other beneficiaries, that this would help them to strengthen their capacity and establishing and following up their projects. But what about like accessing to markets? Because access to markets also, especially in dairy products, would be a very big bottleneck, especially for micro breeders. There should be a sort of a market system arrangement to ensure the collection of these milk through a cold chain, which is also a heavy investment. So how you work on tackling this?
Right. So I say that is the role that companies like us play. So we bring in the market, we assure that the milk finds a buyer, because giving a loan without the buyer doesn't make sense. I mean, where is she gonna get the money from? So that's where the role that intermediaries like us can play in not only ensuring the buyer, but also ensuring that the right cold chain is there. So there are companies and there are enough aggregators out there who can do this investment. For us, the return on investment comes through higher volumes of milk. To get higher volumes of milk, you need to have more cattle in the village, which means that you need to disburse more loans in the village. So it's like a virtuous cycle. So why would a lady take a loan to buy a new cattle unless I guarantee her that I will buy the milk from her? So it's like, so I guarantee that I will buy her milk. I guarantee the financial institution that I will deduct the money, from my payment to the farmer and pay you your installment. So that's a virtuous cycle, and that's how it's going to work. All parts of the chain have to be taken care of.
Yeah. Nalini, the floor is yours.
Hello. Yeah, I just wanted to add some points to what Mr. Jofi said, is that definitely it is even if it's a women is new, it's the value chain partnership which we are the partnership is very important in terms of which partner we are with, because their presence on ground, as they know the entire value chain, and plus there should be a demand and supply both. So before we enter into any partnership, before we enter into any region where we want to give loan, what we also see is that is there adequate demand, and that's why these women are taking cattle. So that gap should not be there, and that's where the partnership with Promethean or with Stell Labs or with any other dairy chain partner, it is helpful because they know the ground, that if I take milk, like we were doing one of the project in Tiptur where all the women borrowers, they were taking loan for a cow or a buffalo, and they were going and pouring it in Nandini. That's one of the milk aggregator here, and there they were getting money in a digital form in their bank account. So ensuring that entire value chain is there or not. So that is something which we do. And also it is like you asked about, they may or may not have a smartphone. A lady will not have a house on her own name. A lady will not have the house. So what we see is there in her household, what all amenities are there. That is how we want to analyze her income, because it is today in urban area also, the house is in the name of the other gender. It's on the name of the male and not in the name of women in many areas. So when we analyze them, we see, okay, how many assets are there which is in the household. So we analyze them on the basis of household, because we know that the women may not have a smartphone on her own name. Like there will be one smartphone in the household which will be used by her son or by her husband. So on that basis, we analyze that, okay, what is the capacity of the household in terms of repaying a loan which is taken? Because yes, there is a lot of default. There are various angles because of which there might be a default. A political party may come and tell, okay, your entire loan is waived off. So that is also a risk which we run today in India. So there are various risks, and plus there are various risks that where they don't want to pay. So that's where the entire partnering comes into picture, where partner also has a comfort and social underwriting is done, that okay, this lady, even though she is new to business, even though she has not taken any loan till now, or she may or may not have taken loan till now, she's coming new as a new cattle farmer, but we'll be able to but we know that she'll be able to repay. The societal underwriting is that's where it comes into picture.
Thank you so much. And we have a question from one of the audience regarding the role of the public sector to support women access to end-user financing schemes. And I would direct this question to Judith and Lorraine to put an emphasis on what is needed to strengthen the enabling environment in Zimbabwe and in other countries to facilitate women access to end-users financing schemes. Thinking over to you, Judith.
Nora, I think the public should play the bigger role in supporting women in terms of financially, because when we look at most or the majority of women, they are in rural areas, and most of them, they rely on their male counterparts for access to financing. So if the public sector could come in and provide different programs. I understand there are other different programs that are offered by our local ministry for the Ministry of Women Affairs, whereby they help women in different projects, as well as they help accessing financing towards those projects. So those are some of the initiatives that we look forward to from the public sector, to say they bridge in the gap between what the private sector is offering, what the microfinance institutions are offering. And if this can come together, can be put together, I think more women will be helped and will have access to end user financing in various projects. So in Zimbabwe, the Ministry of Women Affairs has various departments whereby they help women in different areas in terms of projects that they will be doing, as well as assisting in exporting, if it is to do with exporting some of their products, if they need to be exported, there's access to different markets. So that is what I know that's actually happening in the country at the moment. Thank you.
Yeah, thank you so much, Judith. And also we have like a similar initiative in Egypt where the National Council for Women, which is the women mechanism in Egypt, has collaborated with the UN Women to establish a new initiative that is on the ground for all rural women in different governorates to convene like women groups, to establish women groups through a commercial bank, where they issue for them an ATM card where they can save in groups. So, and this also ensures reaching out to women, to grassroots women through grassroots NGOs that do not have access to like technology or smartphones, or not necessarily know about this initiative. So these are like types of support from. I'd like to hand the floor to Jane if you'd like to add anything to this, what is needed from various ministries, from the government to strengthen the environment of rural women to access finance.
I hope you can hear me. Maybe just to add, I totally agree with Judith in terms of collaboration between the government and the private sector. I think private sector more in terms of mentorship for women that will have graduated into maybe medium-sized enterprises for them to get contracts. Likewise, the government could have a deliberate policy to support women by giving them a quota or where they can get contracts to grow their businesses. But I think there is more room to address the issue of costs if, as private sector partners, like Judith and myself, we collaborate in applying for grants, because when we get those grants, they enable us to reduce the cost of financing to the end user so that they are not overburdened with debt, and that tends to constrain their capacity to grow. So those are my additions.
Thank you so much. And Alia, Jofi, Dr. Ahmed, and Nalini, would you like to add anything about what is needed to strengthen the enabling environment in different countries to enable the access of women to end-user financing schemes and programs?
Right. So I'll just give a final few thoughts. So I think, I mean, somebody was asking about the role of the public sector, and I think there is a huge role that the public sector can play. When we started working, so we were always in the dairy industry, but it's only in the last 3 to 4 years that we have been working extremely closely with farmers. What we realize is that there is a lot of potential to increase the productivity in agriculture in India, especially in the dairy farming. And what is holding back is enough capacity, enough training, or enough inputs. Now, there are pockets where companies like us can impact, but it will always be small pockets. My own belief is that there is a huge role that the government can play, not in subsidizing anything, but just in ensuring that there is enough capacity built for the women in terms of how to maximize their productivity from agriculture, whether it is dairy farming or anything else. I think the technology is there. There are enough companies out there who want to do the right thing. There are enough finance companies out there who provided there is the right model, would always be willing to come and invest. What is a challenge is always the capacity and the ability of the farmers to derive the maximum out of what resources they're getting. And I think that's where the government has a huge role to play. I think the rest of it, there are, provision of technology, provision of finance. There are enough companies like ours and Avanti out there who can fulfill that role.
Do we have any other insights that you like to add any other point?
I think all parties should collaborate to push micro businesses and all parties should collaborate to push micro businesses as it's an insurance for market and the climate mitigation and adaptation, and pushing the food security. This is the future all over the world after COVID-19, facing many challenges in food security issue. So emphasizing the micro markets, especially women, especially yes, to this is it must be done and by the governments, NGOs, individuals, private companies, all of the parties.
Thank you so much, Dr. Ahmed. Nalini, would you like to add something?
Yes, Nora. So, to sum it up, the challenges which we see today in terms of women getting credit even though there is 90% women who we want more women, what we are seeing is that what I see is all women who are getting credit is for less than ₹1 lakh loan. But if we want to give them a credit for a higher ticket size loan, first there is the demand is less, and second is there is no comfort is less in terms of any NBFC to give them a higher ticket size loan. Reason being, the cash inflow today is more in terms of I cannot actually see the cash inflow in her bank account. It is either in her husband's account or in son's account. The digital cash inflow is not into her account. There are very few value chains where it is only women's bank account where the money is also inflowing, and then we are able to justify why she requires a 3 lakh or a 4 lakh rupee loan. So for her to migrate to take a higher ticket size loan, an unsecured higher ticket size loan, not a collateral based, not a secured but an unsecured loan, the major problem today which we see is that the fund flow which is there, it is in terms of cash, not in terms of, and not to her bank account but more to her husband's bank account. Second is also what we see is most of the women are not only doing business is plus one. First is the household, and then she is doing a business where a business is not a very big part of she doesn't spend 100% of her time there, but she has a household, and then plus one, she is having a buffalo, or she's having a cow, or she has a small business. She cannot establish a business. It also depends more from a society. If I go to Manipur today, it's more of a matriarchal society where women are the one who takes decision. They are the one running the family. There, yes, I can give them a higher ticket size loan because they are the one who is weaving. They are doing the marketing. They are selling everything. But when I come to society, to a different part of India, coming to a northern part of India, or many other where women say is less, they are doing a business. Many of the women take loan for they ensure their husband uses it for the end use, but a lot of women, we cannot give them loan for a higher ticket size as there is no we cannot figure out the cash flow and analyze them and then take a decisioning in terms of why she requires a higher ticket size loan. So something which is definitely required in all the value chain is that if a woman is taking a loan, especially in terms of livestock, if she's taking a loan for a livestock, all the money which she's getting, it should come to her bank account, not to any of her household members. That will ensure that she can take a higher ticket size loan and buy a better, she can take loans subsequently from different financial sectors at a lower rate of interest as well, because what we also want is their digital footprints to be there so that they can be able to take loan at a very lower interest rate going forward.
Thank you so much. And we have our last question regarding the small farmers in Central Africa who are great producers but lack financial support from the government and donors. What is the plan involved to support these small farmers? I would direct this question to Lorraine to answer if there is and support the farmers in Central Africa.
Sorry, Nora, I could not hear you because maybe if you get closer to the mic, I struggle to hear you. Please repeat the question.
A question regarding smallholder farmers in Central Africa who are great producers, but they lack financial support from the government and donors. So what is the plan involved to support these small farmers? I believe the question is tackling mainly available loans to small farmers, smallholder farmers in Central Africa.
Okay, I'll speak for Zimbabwe. We have an agricultural finance bank, which is owned by the government, and the government arranges lines of credit specifically for farmers. Over and above that, we do have, to quite a significant extent, a lot of microfinance organizations working with donor partners that have funding specifically for farmers. And usually we work through the more experienced farmers to support the small-scale farmers. The government also has agricultural extension officers that give technical support to a lot of our smallholder farmers to help them to grow. So that would be my response to that.
And I would like to thank you all.
I Nora, if I can also add to what Lorraine has just said, for those in Central Africa, probably for organizations like Water and Energy for Food, I understand they also assist the Central African part of the country. If they can also apply for the grants that are offered by Water and Energy for Food, probably they can also get some help, those producers, depending on what their proposal would be, since the Water and Energy for Food does look at these three nexus: the water, the energy, and the food nexus. So probably they can also get some support from such organizations. Thank you.
Yeah, thank you so much. And it was a pleasure to be with all of you today. Thanks to our esteemed speakers and panelists for sharing their experiences, for highlighting the new business models in agriculture, black soldier fly, in renewable energy, in dairy products, in new innovations in end-user financing schemes from Lebanon, from Zimbabwe and India, working with women cooperatives, availing finance through pay as you go, through mobile apps, and very interesting insights. And we've ensured to document these initiatives, insights in a blog that we're going to put the water energy and social links for your time, and looking forward to future webinars.
Thank you everyone for joining, and happy International Women's Day. Thank you for the speakers.
Bye-bye. Thanks.
Thank you.
Thank you, everyone. Thank you.
Bye-bye.
Thank you so much. Goodbye.
Thank you.